XNDU Quantum Technologies jumped 18.2%. Lab scores 35 out of 100. Caution. XNDU's hardware architecture is a critical liability. Their 10 decibel squeezing level is physically insufficient for fault tolerance. The market cheered today's move. However, photonic quantum computing lives or dies by optical insertion loss. XNDU's custom silicon nitride chips face a hard boundary. If optical loss exceeds 0.1 decibels per junction, the quantum state collapses. Unlike IBM's superconducting Osprey processor, which relies on dilution refrigerators to maintain coherence, XNDU runs at room temperature. Yet, it loses vital quantum information through waveguide scattering. To scale, XNDU must compete with PsiQuantum's fusion-based architecture. PsiQuantum leverages extreme ultraviolet lithography to keep waveguide loss below 0.02 decibels per centimeter. Without achieving a 15 decibel squeezing level, XNDU cannot run the error-correcting codes necessary for commercial algorithms. This engineering bottleneck means their current hardware cannot outperform a classical supercomputer. Today's 18.24% surge to $13.94 is completely decoupled from this physical constraint. Retail momentum is driving this move. Until XNDU proves it can manufacture low-loss, high-squeezing photonic chips at scale, this rally is built on hype. Quarterly financials showing modest revenue momentum for XNDU. By Q4 2026, a stagflationary macro environment driven by energy sector supply chain shocks will compress XNDU's valuation multiple by 40%. Speculative tech will suffer. With the Federal Reserve's policy rate at 3.63% and a normalizing yield spread of plus 0.40%, capital is no longer free. XNDU's capital-intensive research and development cannot survive on cheap money. While consumer price inflation sits at a low 0.6%, rising global energy costs threaten to spike operational overhead for advanced fabrication facilities. Furthermore, escalating trade tensions bring severe policy risks. Proposed tariffs and strict U.S. export controls on quantum-grade silicon threaten to block XNDU from key international foundry partners. This restricts their manufacturing pipeline entirely. Geopolitically, the tech war between the United States and China directly impacts XNDU's global expansion. With prediction markets pricing a 7.2% recession risk, institutional investors are rotating out of high beta assets. XNDU, carrying a beta of 1.00, is highly vulnerable to this macro shift. On the social front, political backlash against artificial intelligence and quantum computing export risks is tightening global regulatory frameworks, raising compliance costs. Despite a massive revenue growth rate of 305.2%, XNDU's lack of profitability makes it a prime target for short sellers, as evidenced by a high short float of 15.7%. The macro wave is turning into a headwind, and XNDU is ill-prepared to ride it. XNDU is trading below its 20-day average, currently at 13.9. Management's headline this quarter: XNDU is the pure-play quantum computing leader with a scalable, photonic architecture. 3 words: pure-play, scalable, photonic, designed to make investors feel they're buying the next NVIDIA, not a pre-revenue lab experiment. What it's designed to make them not think about. That pure-play is a euphemism for zero commercial revenue, and scalable is a bet on a hardware roadmap that hasn't left the cleanroom. Here's the decode. Institutions are piling in. Top 5 holders upped stakes last quarter, but insiders? Silent. No buys, no sells, no options. That's not confidence. That's legal caution. When founders and CTOs stop trading their own stock, it's because the next 12 months are binary. Either the tech works or the cash burns to zero. And R&D. $55 million last quarter, 1,196% of revenue. That's not efficiency, that's a bonfire. Management calls it investment in the future. The lab hears, we have no idea when this becomes a business. Last quarter, the earnings call script read, we are making steady progress toward fault-tolerant quantum advantage. This quarter, it's, we are on track for meaningful commercialization in the medium term. Translation, we missed the timeline we promised last quarter. The Q&A is where the truth leaks. Analysts asked about customer pilots. CEO pivoted to partnerships with leading cloud providers. That's not revenue. That's free beta testing. And R&D as a percentage of revenue? Up 40% YOY. That's not a ramp. That's a margin death spiral in the making. The momentum breakdown for XNDU. RSI sits at 33, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bearish, with downward histogram pressure. Xanadu's bull case rests on its unique photonic architecture and massive 305.2% revenue growth. The bullish options flow, with a put-to-call ratio of 0.17, shows institutional players are buying up $20 strike calls, betting that room temperature quantum scaling will bypass cryogenic bottlenecks. But here's what breaks the bull thesis. Xanadu remains unprofitable with a forward price-to-earnings ratio of negative 11.3. It trades below its 50-day moving average of $17.66, and bearish momentum indicates today's rally lacks institutional backing. The critical question is, can Xanadu overcome physical waveguide losses before running out of capital? The lab's answer is a definitive no. With the Federal Reserve's policy rate raising borrowing costs for capital-intensive research, Xanadu cannot fund its development indefinitely. Furthermore, strict U.S. export controls on quantum-grade silicon will restrict their addressable market, meaning their soaring revenue growth will hit a structural wall long before they achieve fault-tolerant quantum computing at scale. Our AI score of 35 out of 100 reflects low conviction. If Xanadu fails to break above resistance at $17.84 by Q3 2026, expect the stock to slide to support at $11.72 due to persistent bearish momentum. However, if they clear $17.84, a short squeeze could target $20. We favor the downside. Here's the macro picture shaping XNDU. The Federal Reserve's 5.25% policy rate raises borrowing costs for Xanadu's capital-intensive R&D, and U.S. export control rules on quantum-grade silicon curb sales to China. XNDU's 200mm wafer yield just cratered. This isn't a dip, it's a structural break. Where do you see XNDU in 30 days? Up, down, or flat? Drop your call. This isn't financial advice. We're engineers, not brokers. Markets move fast, data gets stale, and your risk is yours alone. Past performance? No guarantee. Always run your own numbers. Hit subscribe. We'll decode the next semiconductor cliff before Wall Street sees it. If you want our full breakdown on Wolfspeed, the link is in the description. Stay sharp, the lab's out.